Joining us to talk about all of this and more in a CNBC exclusive is Coca-Cola CEO Henrique Braun, his first broadcast interview since taking the post back in March. Thank you for having us, first of all.
Thank you for being here, Sara.
It's great to finally hear from you. You're a Coke lifer. You've been here since 30 years, started as an intern, which makes you actually the third CEO I've interviewed who started as an intern. How does Coke look different under your leadership?
Yeah, well, first of all, yes, and it's a lifetime experience. I started right here in Atlanta, and I traveled the world in 4 different continents. It's been a great opportunity. Look, on my leadership, it's a lot about continuity. We have been doing a lot of things right, and we're going to continue to do that, which is about building billion-dollar brands in the way that we have been doing, continue to leverage our system, our bottlers and us working hand in hand together. We are in unprecedented alignment times, and we're going to continue to nurture that. And what's going to be different is, or we're going to dial up a little bit, it's more consumer-centric than ever. And to that extent, that means innovation, getting the 4 I's that I like to call it, which is getting insights, innovation, intimacy, leveraging scale, but intimacy at the different markets, and integration in a way that we're going to get more from our markets and more from our categories. Exactly what we have seen this quarter and the first half of the year.
I mean, this quarter, look, this stock hasn't seen a move like this since back in 2020. It worked on volumes, not just price, which is a change. It seems like all geographies grew, a lot of the product grew. So what do you attribute the growth to that you're seeing right now?
Well, the growth really comes with the consistency of working in tandem with our bottlers all over the world, trying to do a little bit better every day on the execution of our strategies. And we came out in this quarter having more from our markets, more from our categories, and it was all embedded into the way that we saw the year lined up. We talked about it in the beginning of the year, that would be a more balanced growth algorithm with volume and price mix more in tandem moving into the year. So that's what we have been seeing.
Because it had been all about price. I mean, that was a lot of the growth, both in your business and what we've seen from other consumer staples. So does that mean that sort of like you've hit a ceiling on price, consumers pushing back?
What we see on the consumers, it's actually more value seeking or worth choosing opportunities. And I think we have a very disciplined way of how to connect with the consumers in a way that we bring the excitement about being with the brands in their hands and their lives, and also with the right occasions, right channels, and then pricing is a part of it, but you need to be worth choosing. And I think that's what we came out with,
give them a lot of options.
Give them a lot of options, yeah.
Doug, do we have an inflation problem as you see it in this country, both on your costs and how you're passing on prices?
Look, we're 140 years into this business. Inflation is always one data point as well. What we are seeing is that when you have a dynamic environment on the consumer front like we have right now, it's very important to play on both ends of affordability and premiumization. Good example of that is what we have done in North America. You know the famous mini cans that we have. When you have them on the retail with the right multi-packs, they play more on the premium side. When you have the mini cans, individual single cans on other channels, they play an entry pack role, which is more on the affordability. So you can actually provide those choices for the consumers that are having more pressure or the ones that want more convenience and tap into that. Innovation is another area that we see that helps a lot in days like these to give another reason for the consumers to engage with our products.
And pay up for it. So are you seeing any change in consumer behavior in North America? Is the consumer weakening at all?
On the aggregated basis for the industry, they continue to participate. And we saw on our numbers. It's more on the low-income consumer. You could stretch it to the low-income consumer that they are looking for that value. And that's why it's so important to provide them with the choices.
But you guys have been saying that for the last few quarters. Is anything different?
We are very consistent. You know, that's something that continuity. And part of this business is actually leveraging the scale, being really intimate as we have been, and doing a little bit better every day.
The World Cup was certainly helped. I mean, you saw good growth in North America. You guys were a big sponsor. I mean, even if the fans still love the hydration breaks, it sounds like they sold a lot more Powerade for you.
Well, look, we had during the World Cup really a great opportunity for us to shine our brands. You know, during the hydration brand, Powerade was there. Powerade actually in the U.S. Grew, high single digits, which is great. Coca-Cola globally grew in every operated market as well. And we're very pleased of the way that we showed up in the World Cup, right? Which was not only about the venues itself, where the teams here in U.S., in Canada, and Mexico did a tremendous job, but also the anticipation of it. We did for the first time an innovation on our cans. We called connected cans, and on the bottles, the Panini stickers, that gave another reason for the consumers to engage digitally to our packages all over the world, and that amplified the event. That learning will be transferred to other campaigns moving forward.